Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure to subscribe. This is the place to be for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about gold. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect of this market. Then we will be moving to the order flow since we just got the new data, which shows exactly how institutions, so the biggest speculators in the market, are doing. So essentially hedge funds and the non-commercials in the market are moving their positioning. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. And at the moment, we have quite interesting price action since we just got exactly what we wanted to see from the previous analysis, especially when it comes to the order flow. Now, starting here from the monthly time frame, what we can see is that we have a market which has just rejected a quite significant monthly demand and support area. In fact, from here, all this previous rejection to the upside was created. The market then retraced all the way down to this exact same level and rejected it to the upside. We can also notice how in approaching this zone, the market had also created this M pattern. And as I said many times, after the creation of an M pattern, there is a high probability of getting a rejection higher, at least for the completion of the pattern at the neckline, which is the previous support turned resistance. So here on the monthly, everything just was printed here exactly as you would expect in a situation like this. Dropping down on the weekly time frame, what do we see? Now, from a weekly standpoint, we can notice also here how we had the creation of this M pattern, which has now been completed at the neckline. However, in completing this M pattern at the neckline, the market has also now broken above all weekly structure. In fact, we just had this weekly close here, which is clearly above previous weekly resistance, which is now turned support here. So after an impulse, what we could expect is for the market to correct to this previous weekly resistance turn support and then to be rejected to the upside away from this level. We can also notice that, generally speaking, after an impulse, if we want to measure the correction, we have to take our Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how we have the 0.32 Fibonacci retracement lining up precisely with this previous resistance turn support, creating a confluence of support at this level that we could in fact expect this market to test and then to reject to the upside. Now, if we drop down on the daily time frame, what do we see? Now, from a daily standpoint, this is where things get quite interesting. Now, first of all, I did speak about gold quite a few times in the past. I spoke about it when the market was here. I explained all the reasons for which we could expect this move higher, and that is exactly what the market gave us. Then we had the creation of this red candle, and after the break above, I explained all the reasons for which we could expect a retest of the level. The market gave us that, respected it as support, and created this impulse to the upside. After that, and we did another breakdown explaining all the reasons for which we could expect a correction and then more bullish continuation, which again is exactly what the market gave us after having a nice test of this support that we had around this zone. And by the way, I will link in description all this previous analysis so you can go and check them out for more free education. Now, at the moment, from a daily perspective, also here it is quite clear how we just got a strong impulse to the upside, breaking above all structure as we have just identified from a weekly perspective. However, also here on the daily, important structure has been broken. This is previous resistance from which all this move lower was created, again acting as resistance here, which has now been broken to the upside. So all this previous resistance is now acting as support here. And as we got an impulse also here, if we want to measure a potential correction, we have to take our Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how we have the perfect 50% and 0.618 Fibonacci retracements lining up exactly inside of this area, creating a confluence of support inside of this zone that we could in fact expect this market to want to go and test and then to reject to the upside. Now, this is a quite interesting zone especially because we could see institutional longing inside of this area, which at that point would further increase the probabilities of a potential move higher. Now, why do I say more institutional longing? Because if we go and see what we have when it comes to the commitment of traders, so what institutions are doing in the market, we can see with the last report, we went from 71.4k net positions to 112k net positions. Now, if you watched my previous analysis, you will have noticed that I said how there was a high probability that net positioning and essentially the COT data was getting manipulated with the previous report, and that with the new report we would see a lot of longs added and a lot of shorts getting closed. Now, that is in fact exactly what was just confirmed. As I expected, with the new report, we now have 11,000 longs added and 30,000 shorts getting closed with the new report. So that is exactly what we wanted to see. More institutional longing, and if the market will now retrace to this area here, there is good probability to see more longs added, more shorts getting closed on the institutional side of the market, increasing the probabilities of a potential move higher. So if the market will retrace to this area, how we could be approaching a potential move higher. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point we could be looking for a potential move higher for the market to complete this impulse correction and impulse pattern to the upside. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website. Here, you have the possibility to gain access to my entire courses with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower here past the testimonials, you will see that at the moment there is a massive special promotion in which you have a huge discount on the upfront price of the program from $497 all the way down to only $97 one-time payment. And if you scroll lower, you will see that at the moment there is still time to join before the offer expires and price goes back to normal. However, time is definitely starting to run out, so I really suggest to go and check it out as soon as possible. And from here, there is the button to join in order to gain automatically access with the email and password that you will create during the checkout process. So definitely looking forward to have you on board. The link is also in the description and I will see you in it. If you enjoyed the video, make sure to drop a like and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.